Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, so it is November 10th, 2025, and the cryptocurrency market is really giving us the split screen view right now.
Definitely. On one side, you've got, well, almost chaos driven by U.S. political instability.
Right. And then on the other, massive sort of quiet infrastructure building happening pretty much everywhere else globally.
It's a real paradox. So today, we're taking a deep dive into your sources to help you understand what's going on.
Exactly. What is this central conflict?
Well, it's a classic tug of war, isn't it?
Yeah.
You had Bitcoin hitting a new all-time high just last month, which was huge.
Huge momentum.
But the market now isn't really comparable to what people were anticipating for October highs. And that's because the ongoing U.S. government shutdown has just acted like this heavy anchor ever since it started.
So prices are trying to crawl back up, but you can feel the investor confidence is just, well, tied to Washington's dysfunction.
It really is.
So the mission today, and this is crucial for you, the listener, is figuring out exactly how this political gridlock in Washington is dampening prices.
And critically, what key institutional moves are happening despite that? You know, from regulators, stablecoin giants, global economies.
Moves that are maybe building the escape velocity needed to finally decouple the crypto market from all this U.S. uncertainty. Is that even possible?
Well, the data immediately reflects the nervousness, the crypto fear and greed index. It's sitting deep in fear territory.
How deep?
Currently pegged at 24. That's low. And that number really sets the tone for, well, pretty much everything we need to discuss.
Okay, 24. Fear. Let's start right there, where the fear seems to be generating the U.S. Congress. Sources we looked at indicate this specific government shutdown is fundamentally rooted in some really intense partisan opposition.
Deep ideological divides, mainly over federal spending priorities. That's what's brought the whole legislative process to a halt.
Now, the source material does mention specific political dynamics, including claims about Trump derangement syndrome driving Democratic opposition. We're just reporting what the source says here, not taking sides.
Absolutely. What's crucial for you, the listener, isn't really the political blame game, right? It's the actual financial transmission mechanism.
Yes. How does a fight over a budget bill actually translate into a sharper price dip for Bitcoin? That's the connection we need to make clear.
Exactly. It's not just vibes, it's mechanics.
So detail those concrete financial consequences for us. What's happening?
Okay, so we see three major effects playing out. First, there's a significant liquidity crunch.
Meaning?
During this kind of paralysis, the U.S. Treasury holds back on spending. It tightens dollar liquidity across global markets.
Ah, okay. Less cash flowing around overall.
Precisely. And less cash means less fuel for crypto purchases. Simple as that. And when selling does happen, you see sharper, deeper price dips because there's less buy-side support.
Got it. So the market isn't just reacting psychologically. The literal cash available to buy the dip is actually constrained by this shutdown.
That's a huge part of it. Second, there's a crippling regulatory freeze.
Right. Congress is gridlocked.
They're paralyzed by this budget fight. So any progress on crucial crypto laws, things like market structure, stablecoin regulation, taxation, it's just non-existent right now.
Which fuels what you called fiscal paralysis.
Yes, because companies and investors lack certainty. How do you operate safely? How do you build new projects in the U.S. if the rules are completely up in the air? This uncertainty slows everything down.
And you can see that lack of certainty hitting the exchange-traded funds immediately, can't you? We saw huge outflows just last week.
Huge is right. Significant outflows. As of the November 7th trading day, total outflows hit $65 million across the board.
And Bitcoin ETFs?
Unfortunately, Bitcoin led the pack downwards with $558.4 million in outflows. It's a big number. Ethereum ETFs also saw about $46.6 million flowing out.
Wow, $558 million out of Bitcoin ETFs. Is that just temporary panic selling because of the shutdown noise, or is it something deeper, maybe a reassessment of the short-term risk because of this regulatory inaction?
I think it's probably a bit of both. It's definitely short-term panic driven by the immediate uncertainty. But if you zoom out, it connects to this longer-term issue, the debt bomb pressure.
America's national debt.
Exactly. America's growing debt pressures, they force institutions, and frankly everyone, to seriously question the dollar's long-term stability. The sources we reviewed confirm this. Investors are increasingly positioning Bitcoin as the primary hedge.
A hedge against what the sources called endless money printing and political gridlock.
That's the narrative gaining traction. Bitcoin as the alternative to that cycle.
Okay, now, on the political front, there's talk of a way out, maybe. President Donald Trump is reportedly advising Republicans strongly to use the nuclear option.
Which means ending the Senate filibuster, needing only 51 votes instead of 60, to pass spending bills and reopen the government.
Highly dramatic political maneuver. If that actually happens, what's the market expectation? More chaos or relief?
Well, the expectation is probably short-term swings. Market reacting to the headlines, the political drama. But longer term, it might actually strengthen the momentum for crypto.
How so?
Because it reinforces the narrative, doesn't it? That the U.S. political system is fundamentally, maybe increasingly unstable. And that just makes the decentralized alternative look even more attractive as a safe haven.
Interesting. So even the solution could bolster the case for crypto long term? Okay, but if Washington, the legislative branch, is paralyzed, where is any actionable regulatory clarity coming from? That brings us to the agencies, right?
Exactly. And this is what's truly fascinating. While Congress is effectively shut down, key regulators are actually moving forward. The CFTC, for instance.
U.S. Commodity Futures Trading Commission, our main derivatives regulator.
That's the one. They are reportedly fast-tracking approval for regulated U.S. spot crypto trading.
Spot trading, that's critical. How is the acting chair, Caroline Pham, doing this? How can she bypass the gridlock in Congress?
Well, she's working directly with the exchanges. The plan is apparently to launch these regulated spot products this year. And importantly, allowing stablecoins to be used as collateral.
So institutions get a safe, compliant way to trade actual Bitcoin and Ethereum, not just futures, without needing a new law from Congress right now.
Precisely. It circumvents the immediate need for congressional action. And this kind of regulatory oversight, even from an agency, adds immediate credibility. It boosts legitimacy.
It signals some market certainty where there wasn't any.
Exactly, which should, ultimately help trigger more bullish momentum for Bitcoin, Ethereum, and probably some altcoins too. It provides a clearer path for institutional money.
Okay, so that's the institutional side, maybe building a bit of a floor under the market. But on the more, let's say, decentralized side, the immediate reaction to all this instability has been a flight towards anonymity, right? Tell us about this surge in privacy coins.
Yeah, that's been quite noticeable. Privacy assets, coins focused on anonymous transactions, they've been gaining pace steadily for about 3 weeks.
And then a big jump recently.
A major pump just in the last 24 hours or so, looking at the numbers. Monero up about 18.6%, Dash up 11.6%, Zcash around 11%.
Those are solid gains.
But look at Decred, DCR, up a staggering 38%.
38%, wow. That's a massive outlier, even among privacy coins. Why Decred specifically surging so much more?
Well, DCR has a strong focus on governance and censorship resistance built into its protocol. That aggressive pump suggests some investors are actively valuing those features: true governance, resistance to control, maybe even over sheer market cap size, especially in times of political chaos.
So it tells you people are actively seeking assets designed to be impervious to the kind of political instability we've just been talking about.
That seems to be the signal. And yeah, the strong accumulation of privacy coins, it does indirectly draw some market dominance away from Bitcoin and Ethereum.
Yeah.
A little shift in focus.
Okay, let's pivot now. Let's shift focus completely out of the Western Hemisphere for a moment and look at how global infrastructure is being built, sort of regardless of U.S. politics. Tether, the biggest, most influential stablecoin, has made 2 incredibly high-impact moves recently.
That's right. And they show different facets of Tether's strategy. First, just the sheer institutional confidence they're projecting in Bitcoin itself.
They're a big purchase.
Yeah, they bought another 9,160 Bitcoin, worth roughly $96 million at the time.
Okay. Adding to their stack.
A big addition. It brings their total holdings now to 87,296 BTC. That's valued at approximately $8.84 billion.
Wow. And that makes their wallet.
Their main wallet is now the 6th largest holder of Bitcoin globally, and they're sitting on an unrealized profit, just on that Bitcoin, of about $4.55 billion.
That is an absolute conviction trade, isn't it? Betting big on Bitcoin's future strength, regardless of short-term volatility.
Absolutely screams conviction. But the second move, the one in Vietnam, that might be even more fundamentally significant in terms of scope.
Right, the governance push. They signed a Memorandum of Understanding, an MOU, with the city of Da Nang. What's that about?
This is really provocative stuff. They're partnering with the city to develop blockchain-based digital governance and infrastructure.
Digital governance, what does that entail?
It includes things like establishing policy frameworks for how blockchain can be used locally, looking at real-world asset tokenization, tokenizing things like property or bonds, and setting up regulatory sandboxes to test these ideas safely.
Okay, so Tether isn't just, processing stablecoin transactions anymore. They're looking to build parts of the city's actual digital plumbing system.
That's a great way to put it, the plumbing. What does this mean when you compare it to legacy financial systems, like, say, Visa or SWIFT?
Yeah, what's the implication there?
It means Tether is moving into a completely different sphere of influence. Visa, SWIFT, they primarily focus on moving money between existing banks and merchants, right? Financial messaging.
Standard payments?
Exactly. Tether, through this dotting MOU, seems to be aiming to integrate directly into core city systems, things like governance processes, public payments, maybe even digital identity management.
Wow. So if this works, could governments potentially use a Tether-like framework to, say, distribute welfare benefits, collect local taxes, issue digital IDs, faster and cheaper than using traditional banks?
That seems to be the potential here. The scope is just vastly broader, potentially far more powerful systemically than anything a traditional payment network like Visa holds today. It's about infrastructure, not just transactions.
Fascinating. And this strategy, proactively building digital infrastructure outside of those traditional Western markets, it's being echoed pretty strongly in Pakistan too, isn't it?
Very strongly. Pakistan is moving aggressively toward financial digitalization. They see a huge opportunity, potentially a $25 billion crypto market locally.
And what are they actually doing?
Well, they're exploring launching their own rupee-backed stablecoin. And they're also developing a central bank digital currency, a CBDC prototype.
Okay, CBDC is a big step. Are they getting help with that?
Crucially, yes. They have technical support from both the World Bank and the IMF. That's significant backing.
And their current crypto adoption rate is already pretty high.
It's massive, actually. Pakistan is currently ranked number 3 globally in crypto adoption, according to some indices.
Number 3. Wow.
Yeah. And they're not just letting it happen passively. They've introduced a new virtual asset ordinance for 2025 and are actively inviting international crypto firms to apply for licenses under that new framework.
So they're positioning themselves as a regulated global hub, trying to attract the business.
Exactly. Proactive regulation and infrastructure building.
Okay, let's shift our gaze again, maybe further east, and look at this idea of the green crypto frontier. We're seeing innovation meeting sustainability goals, particularly with links to Dubai and Africa.
Right. We often hear the critique about crypto mining's energy footprint, which is valid in many cases.
But Dubai-based Phoenix Group seems to be setting a different kind of benchmark in Ethiopia.
They are. They're launching a massive new 30-megawatt hydropower mining operation in a place called Addis, Ethiopia. It's a partnership with Ethiopian Electric Power.
Hydropower. So the key here is the energy source.
Absolutely. This facility will be powered entirely by Ethiopia's renewable, carbon-neutral hydropower grid. Ethiopia has immense hydro resources.
So that completely removes the energy consumption critique for this specific operation, right? While providing, I guess, pretty stable long-term operational power.
Exactly. It's clean and reliable. And this expansion puts Phoenix Group among the world's top 10 Bitcoin miners by capacity. But more importantly, it highlights this global sustainability-focused model. And it's happening in Africa, driven by partnerships there.
That's a powerful counter-narrative. And sticking with that theme of setting benchmarks, Dubai is also collaborating with Malawi on some pretty advanced climate technology.
Yeah, this is another really interesting partnership. It's between the government of Malawi and the Dubai Green Economy Partnership. They're launching what they call the world's first AI-powered Paris Agreement Implementation Platform, PIP for short.
AI-powered Paris Agreement platform. Okay, that sounds incredibly important, but also maybe a bit complex. What's the elevator pitch? What does PIP actually do?
Okay, think of it like this. The Paris Agreement has all these complex goals and reporting requirements for countries, right? Tracking emissions, climate finance, etc.
Yeah, notoriously difficult to manage and verify.
Exactly. So the PIP uses artificial intelligence and secure blockchain infrastructure to basically automate all of that.
Yeah.
It turns those complex global climate promises into real-time auditable data.
So it automates compliance, tracking emissions, reporting, even linking climate action directly with mobilizing the finance needed for it, all on a secure, transparent platform.
That's the goal. Real-time tracking, secure data protection using blockchain, and automating the links between action and finance.
Okay, that's impressive tech. Is this just for Malawi, though, or is the model broader?
This is maybe the most impressive part, the PIP models they've developed. It's being offered for free access to all other countries across Africa, Asia, and the Pacific.
Free access.
Free access. So Dubai is effectively developing and then exporting this advanced governance technology to the global south, emphasizing accessibility and shared progress over just proprietary control.
Wow. Okay, this has really been a deep dive into some stark contradictions today.
It really has.
We've laid out the very real negative financial consequences of the U.S. political gridlock, the fiscal paralysis, those big ETF outflows, the reduced dollar liquidity impacting buying power.
The fear factor driven by Washington.
Right. But then right alongside that, we've seen these powerful, arguably bullish signals coming from global regulatory bodies like the CFTC pushing forward.
And these major institutional builders, people like Tether moving into city infrastructure, Pakistan building regulatory frameworks, Phoenix Group pioneering green mining in Africa, the Dubai Malawi Climate Platform.
It's a very different picture globally.
The synthesis seems pretty unmistakable, doesn't it? While short-term market sentiment might be, temporarily defined by fear, because of Washington's issues.
The global market, outside the U.S. focus, is rapidly building its own legitimacy, its own adoption pathways, and its own compliant infrastructure.
Infrastructure that seems specifically designed, in some ways, to exist and thrive independently of that Western political volatility, building resilience.
So we want to leave you, the listener, with this final thought to maybe mull over. We've seen investors aggressively moving into privacy coins. We've seen Bitcoin increasingly viewed as that essential hedge against political chaos and potential dollar weakness.
Right, the flight to alternatives.
So given that, how might the accelerating high-level technological adoption and infrastructure building that we've talked about today in places like Vietnam, Pakistan, across Africa, how might that eventually lessen the global crypto market's reliance on Washington's gridlock? Maybe entirely.
It feels like the decoupling is already well in progress. The real question is just how fast it accelerates from here.
Exactly. Something to watch closely. take this knowledge forward. Thanks for taking this deep dive with us today.